Hi everyone. Today, something's up as always with the stock market. It's a little bit of a red day, but let's get into the details. So, first of all, I'm an economics kind of guy. I just like to look at things holistically and understand what's happening overall. But let me share how I do it, and that way you can be comfortable too. So, there's a website I love to look at often called Forex Factory. And in Forex Factory, you can get a quick summary around economic news and internationally as well. So for me personally, I'm always looking at the US economic news, but all sorts of news could influence the markets. Generally speaking, I do not trade Forex directly, but I tend to trade equities. It's more exciting for me, but you do you. In this case, what was interesting today is that in the morning at 8:30 a.m. we had some US economic news, and we also had some bad news from China. We'll get to that a little bit later perhaps. But some of the economic news for the United States was better than expected unemployment claims. So we had expected about 240,000 folks would be looking for unemployment support, but it was only around 228. And then the manufacturing index looked a little weak, and then home sales looked a little bit weak. But overall, we're hoping for a little bit more, damage to the U.S. economy based on the interest rate hikes and whatnot. So based on this, I think the market was expecting a little bit of the U.S. Federal Reserve to come out with another interest rate hike. And equities in general is always a derivative of the, equities in terms of stocks is always a derivative of the debt market. So because there's a little bit of fear in the debt market, it tends to take the risk away from equities. So money will flow back from the equities market side back into kind of cash and bonds and treasury and whatever else. So when you see those things happening, it tends to make sense a little bit later, but up front we don't know if things are priced in or not, and that refers to sentiment. So in this case, market sentiment was a little bit the economy's a little bit too good, so central bank might do a little bit more damage. Then we got some news from China. It's not looking that great, but they're trying to get things back on track. Who knows where that's gonna go? At the end of the day, today's that's the almost end of the market. It's 3:30 p.m. on the 20th, so we're almost there. But it's been a pretty bad day overall. If you're going long today, bad timing in that case. Just the triple Qs, which is the Nasdaq index, is already down almost 2.5%. So not looking good. And across all the equities I like to follow, lots of red across the board. So here's the economic news in a nutshell. Just, the economy is looking a little bit too strong. Perhaps we're going to have some more rate hikes coming along from the U.S. Central Bank. And you can tell across different measures of the economy, I guess. In this case, the 2-year yield in Treasuries jumped up a little bit, about 1%. And in the 10-year, we had a 3% gain. These numbers don't feel large, but in terms of debt, an additional 3% gain in a 10-year note is quite substantial. That just means I'm going to lock away money for 10 years hoping to get a little bit of return. 3.855% is not very much, but this is always an indicator. When one is up, typically the other's down. One up meaning the yields are up, you tend to see the equities down. So it's been a down equities day, but it's been a good day for for the treasury bonds and whatever else. So anyway, that's kind of where these two play into each other. It's kind of hard to tell at the market open where it's going to go because, like I said, we don't really fully know if the sentiment is baked in or not and what the day will play out as. We had a little bit of, you can see it from yesterday, it opened up quite low, it had a little bit of a bounce, and then we kind of fell throughout the rest of the day. So yeah, for me personally, I'm just kind of sharing these thoughts as I go along, but as the market opens, I tend to take a look at what are the bond yields doing. If they're in the green, again, I don't care whether it's up or down day, it's really irrelevant for stock market trading, but if it's a green day in the bond yields, I'm probably expecting a red day, and then we kind of see where it goes from there, and vice versa. So you got to kind of see where things go. Some of the big hits today, we had Tesla down already nearly 10%, just depending on what time you're looking at it, but it's been a rough day for Tesla. It's been a rough day across the board. You can see lots of negative here. We have uranium down. We have some of the equities for those tech companies down, as well as the big guys are down too. Even Apple and Adobe and those solid companies are down too. Anyhow, hope that insight helped a little bit. Feel free to ask me any questions, and good luck with your trading. Take care.